Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 15th, 2023, and see what kind of entry and exit signals the strategy has triggered. Let's have a quick look at the charts. Great. You're looking at the two-view chart in the TradingView platform. We have the Nifty spot chart on the left and Nifty futures chart on the right. And both these charts are set to a 3-minute time frame. So before I bring the three custom indicators on, which because of which I call this strategy as a triple threat intraday strategy, let's look at the naked charts and understand the kind of price action that it exhibited on May 15th, right? So you could see the price kind of made a bullish move. The first candle on both these charts pretty much shows that the strength on the upside, and then it was actually moving firmly to the upside, right, in both these charts. So we get to observe the market for the initial 30 to 45 minutes, and we only get into trades post 9:45, right? So as you could see, the price then kind of consolidated and then it moved again, in the direction of the trend, which is up for the day, right? And then it was actually firmly moving up and up until, uh, you know, 2:30. And in the last hour, the price kind of actually corrected and closed a bit lower, right? As you could see, that's the price action. Now let's bring these three indicators on. So I call them as the locations indicator, right? The market participants as represented by this black, blue, and green dots, and the trend meter. So these three indicators, and along with the price action pattern and the candlestick pattern, right? We execute trades. Now, looking at the same chart, you could see that all three moving averages are firmly rising to the up. They're wide apart, and the price is breaking major locations. Like in this case, as you could see on the spot chart, the price moved past the previous day high, right, and was firmly moving through the daily resistance as well. And on this futures chart as well, the price swiftly moved, from the central pivot range, above all three moving averages, and it broke the previous day high, which is the black line, and it firmly moved to the daily resistance, breaking it. And one of the pullback patterns or the trend continuation pattern is once a particular level is broken, if the price retraces back to that same level, while the trend meter actually comes all the way close to the mid mark, which is the 50 line right here on both these charts. Look at it. So we're going to actually execute a trade in favor of the trend, which in today's case is going to be the uptrend. So this exactly is the place where we would execute or enter into a trade. And it's a very famous candlestick pattern, which is called the morning star. So you have the bullish candle followed by a doji, and then you have a bearish candle followed by a doji, and then you have the bullish candle, right? So this candle high, and this candle low, right? So the candle's high is going to be our entry, the candle's low is going to be our stop loss. So on this particular futures chart, now this exactly is how you enter. Okay, so the stop loss is pretty limited. It's a small risk. It's one candle is what we're going to risk, and we're going to trail or stop loss to the green moving average, or if the price goes to a major location like the next daily resistance, right, and shows some kind of strong reversal signals with a lot of participants and volume coming in. So in this case, as you could see, as the price was firmly moving up, there's not much of a participation coming in, right, and it was not at the major location as well. And look at this, the trend meter has moved into the red zone. So we could actually take partial profits as the trend meter moves into the red zone, and we could actually retain the remaining lots, right, and trail or stop loss to the green moving average. So in this case, we could have stayed on to the trade up until this daily resistance right here, and you could have taken profits here, right? So partial profits here, right? 50% of the lots you could square off right here, and the remaining 50% you could have squared off right here. So a beautiful trade to the upside. You actually stayed in favor of the trend. You took the trade in favor of the trend, and you were not surprised. Now, do you get into another trade right here? As you could see, the trend meter, it's still not given us clear indications as to how far the price can move. The price has been steadily moving. We still need the price to dip kind of into the halfway mark, right, and showing us some clear signals for the price to move higher. But in this case, as the price firmly moved up, it couldn't actually move any further higher. It started to fall. It firmly and fell. It firmly fell, and then it actually rose back. Now this is a beautiful, setup to actually enter into a short position, but we do not get into trades post 245 because now it's not guaranteed that the price may move firmly on one direction. There could be a lot of fluctuation or volatility comes into play post 245. So we usually don't take trades beyond 245. So it's just going to be one trade for the day, right? And it was a decent enough. We could have made a decent profit on this particular trade, right? And if you're an aggressive trader, you still could have taken a small trade right here, with 50% lot size with this particular candle. So this move, by the looks of it, it broke the green moving average, it broke the blue moving average, it came as close to the black moving average. Then you know that when the price is between all these moving averages, the price can actually retrace back to the moving average, in this case the blue and the green, and the price can actually fall further, right? And looking at the trend meter, okay, the price firmly moved back to the 50 mark, right? As you could see in both these cases, it's almost close. It's here, slightly above the 50 mark. So this could have been the second trade that you want to take. It's a very limited risk, one candle right here, and then you could actually be into the trade as long as the trend meter gets into the green zone, or the price is showing some stiff reversal with participation and volume, right? So this could have been a second low probability setup because of the time. It's two post 245, but barring this particular trade, so this one trade, this was a high probability setup, and we could have made some profits. That's it for today. So if you like what you're seeing, right, please do like this video and subscribe to my channel to get timely notifications on any new videos I may post. If you'd like to learn the intraday strategy, what these three indicators are, right, how to use the TradingView platform, how to trade in options, right, which strike price to choose, right, what are different patterns and setups that we look at in conjunction to these three indicators, and what are different signals that these three indicators generate. How do you read the charts in conjunction to these indicator signals and then execute trades? I've formulated a beautiful course that's called the intraday strategy course, Triple Threat Intraday Strategy course, right? So you could drop an email or message to my WhatsApp number to get to know more about this course. I've also done a couple of videos listing out the topics that'll be part of the course. It's an end-to-end course targeting beginners and experienced traders, right? So we're going to cover a lot of topics, and all these three custom indicators, they are not available in any charting platform like Zerodha or TradingView. They are customized. They are built exclusively to be placed on the Nifty 3-minute charts, and these three indicators will be given to you absolutely free with lifetime access along with this course, right? And you also get 90 days worth of charts with clear entries and exits based on the patterns and setups that we're going to discuss in the webinar. And you also get to have the Nifty chart analysis video. So you're going to train yourself on this particular strategy, and you're going to gain confidence, right? And you also get a 30-day support to get your questions answered and clarify any doubts. So if you're really interested to get started with your trading business and become a successful, independent, and professional trader, please do contact me and let's get started. Okay. So thank you so much for your time. And until I get back to you with another episode of Nifty Chart Analysis, it's bye from me and take care of you and your loved ones. Bye bye.